Hello and good evening. Welcome to the first chapter of your APM. This chapter relates to Introduction to Strategic Management Accounting, the first pillar, and rather I'll say one of the longest chapters of the whole syllabus. So, what all is there in this chapter? I'll quickly run through. We'll study about strategic planning here. We'll talk about performance hierarchy here. We'll talk about mission. What is a mission? How does a company make its mission? We'll talk about management levels, top level, middle level, operational level, or the lower level. That we'll talk about here. Performance pyramid. Then we'll talk about the rational model of strategic planning, role of performance management in making strategic choices, critical success factors, and key performance indicators. Please mark this as very important. This is very important piece of theory which you will have to apply in the practical part of the questions. Then role of strategic management accountant in strategic planning and control, role of management accountant in providing information to stakeholders, then integrated reporting. Mark this also as very important, hot topic of the day, integrated reporting. GRI, Global Reporting Initiative. Then benchmarking performance. Mark it also important. Benchmarking. Benchmarking is again very important. You will find this as interesting also. It's actually very likely that you find something related to critical success factors, key performance indicators, then benchmarking in the case study which you will face in the exam. Then comes the models used in performance management process. So actually there are 4-5 models here, but what we will study in this chapter is only 3 models. They are SWOT analysis, then it is the BCG matrix, then there is Porter's generic strategies. These 3 only. Remaining models of performance management we will see in rest of the chapters, rest of the syllabus. So I'll start with strategic planning and control. Now, first, we need to understand the basic concept based on which the whole APM syllabus is built. That is strategic planning, that is strategic management, performance management. Now, first, let's understand what is strategy. When we say strategy, you need not learn this definition, you need to just have the understanding of what strategy means. So, strategy is simply we say what we want to achieve, what all action plans must be taken up so that you achieve that, where you want to go as an organization. So, for example, let's suppose you are Reliance Jio. You want to take up the market. You need to build up a strategy, a plan of action which actually enables you to take up the market share, to make you become the king of the market. That's strategy. Now, this definition is not to be learned. Now, when we now understand what is strategy, we need to understand what is strategic planning. There are different types of plannings. Middle level management also plans. Lower level management or the operational level of management also plans. But their plans are comparatively of a short duration of time. They are targeted to achieve small term or smaller targets. But when it is a long term objective, it requires long term strategies also. That means the plan also must be made in a way that it actually enables the entity to achieve the major objectives. Building a brand image, that's a major objective. Now the organization has to decide, has to plan what all processes should be done, what all activities must be taken up so that the ultimate objective is reached. That is strategic planning. That means the major emphasis which comes in picture when we talk about strategic planning is long term, achieving the overall objective of the organization, the main objective. That's strategic planning. Now, when we have understood strategy, strategic planning, now let's come to control. So, control is absolutely the same which you all have been studying in your class 12 also. What is control? Control is control, not allowing anyone to deviate from the planned action. That is control. The driver controls the car. Here also the control is used in the same manner. Now, how does that control work here? When the whole organization is trying to attain a particular objective, if the activities which are planned so that that objective is reached, if those activities they deviate from the set target, then control has to be exercised so that these deviations are controlled in the future. All the activities they are really working towards attainment of the main objective. That's control. So you're not supposed to learn these definitions, but yes, do need to carry the concept of what strategy is, what strategic planning means, and what control means. Now let's just move ahead on performance hierarchy. How you perform, what all are the different levels of responsibility and authority at different levels in an organization, that is performance hierarchy. Now it somehow looks like this. This is a cartoon in the right which you can see on the screen. Now how does it work? So performance hierarchy will just see mission to be on the top of the ladder. That means performance first has to be set based on the mission for which the company is built. We will go in more detail on mission also. Then comes strategic plans and objectives to attain the mission. Now to support this strategic plan and objective, you need to have some tactical plans. You can say middle level plans. And to attain these middle level plans or tactical plans, you need some operational plans also. So how does it work? Let me give you a small example here. Let's suppose the day you are born or the day you turn out to be 5 year old, your parents ideally would start thinking that what will you do when you will become young? पापा कहते हैं बड़ा नाम करेगा, लेकिन नाम क्या करेगा, काम क्या करेगा, that is always there in the minds of your parents. Now what will they do? They will start creating a plan of action so that if suddenly you come up saying, I want to go to Oxford University, I want crores of rupees to be invested in my MBA, I want to do that from abroad. That means they will be preparing a plan that you may need some amount of money for your degree when you want to become a postgraduate or when you want a professional degree to be done. That's the mission, the major mission, to make you having a professional degree. Now to achieve that mission, now they need to build some strategic plans. What are those strategic plans? That mission will be achieved when you study properly, when you are given education which actually is commensurate with the basic idea that you will be going abroad after some time. Maybe then some schools which have got the foreign board recognition may work for you. Maybe the degrees which have got global recognition may work for you. That's a strategic plan. Then tactical plan will be small, 3 to 5 years of plan they will build. In the next 3 to 5 years, they will be concentrating more on making you take admission in a college which actually has got some courses like this. And immediate operational plans. Beta, concentrate on this year's mark sheet. Beta, you need to crack class 12th so that you get this college. And then when you get this college, then you can go to America to study, to US to study, to Australia to study. So these plans are broken down into smaller pieces so that the main mission is achieved. This is performance hierarchy. That's the order in which it works. Now let's move on to mission. Now what is mission? So mission statement is given by every organization. This mission statement gives a broad direction that an organization will follow and summarizes the reasons and values that underlie that organization. That means this is the main intent with which the organization was formed. So if I say, if I give the example of Reliance Jio, now how does that work? Let's make people connect. हर एक friend जरूरी होता है. So Airtel had introduced this advertisement, making friendship as the main point of contact so as to promote people to buy Airtel connection. That was how Airtel got into the market. That was the major intention. Let people connect with each other. Facebook, let people make friends, although virtually, but the main mission with Facebook, with Airtel launching this, with Patanjali launching the Swadeshi products was use of less chemicals in the product. Let people buy something which is made in India. These are the mission statements of the organization. Swadeshi pehno, Swadeshi khao. That's how these mission statements do work. Now, the mission statement is subdivided into strategic, tactical, and operational plans. Again, three levels of a mission here, where broad aims are broken down into more specific objectives and ultimately more detailed targets. That means top level has got a broad idea of a mission, what has to be achieved. Then the lower the level gets, the plans become more detailed because they have to complete each and every penny to do that major task. So now you imagine you are arranging from your siblings' wedding, your elder sister or elder brother's wedding. You are taking care of all the arrangements. Now your dad has given you some amount of money. Okay, champ, now you need to take care of the wedding arrangements. Each and every small penny will be done by you. That means at the operational level, the targets, the plans are more detailed. At the top level, they are more broad. That's the simple idea here also, which we see in our personal lives as well. So now moving on to more details related to mission. Now Drucker, he gave a set of 4 questions which are to be answered when we talk about a mission statement. Now what are these 4 questions? So this is an extract coming from your Kaplan study text. I really liked it, so could not just miss using it here also. You can find that in your book as well. So the fundamental questions which Drucker recommended that every mission statement must answer. Question number 1, what is our business? My business is make people connect. My business is telecom communication, geo. Then what is valued by the customer? For me, what the customer's value is low costs, good connectivity. Third, what should our business be? Now, what should our business be? Our business should be a business which has got a good brand image, a good market share. People know our name. That should be my business. And then last, what will our business be? Actual may, this question, what should our business be? This ideally is our dream, the dream of the promoters. But what will our business be? This is the ground reality. So your mission statement should answer all these 4 questions. What you want to be and what actually is going to be. So my dream is that my hotel turns out to be really well off. But in the pandemic, is it really going to do well off? No. That means the mission statement should be practical also. And the most important part, it doesn't happen that you have given a mission statement, then that mission statement keeps on lingering on with the business for 20 years, 30 years. No, the businesses work in an environment which is changing from day to day basis. If the situations change in which the entity is working, then you need to change the mission statement also. That has to be very carefully handled. Change in environment in which the entity functions should lead to change in the mission statement also. And with this change, what will happen is you will have to change your key performance indicators. You will have to change a lot of things. Small plans also will change. Then your operational plans will also change. A lot of changes will happen in that case. Now let's just go to management levels. Management levels are very simple, which you have been studying since class 11th. So let's see here. What are these management levels? It's a strategic level, then the tactical level is there, then the operational level is there. So there is a bit confusion in tactical level and operational level. Some of the organizations have these two levels as mixed. But if we talk about absolutely the book, then these are three: strategic, tactical, and operational. Now, what is the strategic level? The top level. Simple. At this level, who is involved? The senior management. What do they focus on? They focus on the long term planning of the business. That means the planning which ranges from 5 to 10 years, 3 to 10 years, 6 to 10 years, depends upon how stable we are in any environment. In the pandemic situation, we are not in a stable environment. So even long-term planning will not be for more than 3 years. Then what do they consider? They have to take care of all the stakeholders. They have to take care of the whole organization. They cannot just see one department as a target. Then for them, what type of information is useful? For them, internal as well as external information is useful. They have to see information more in quality rather than quantity. Why? They do not want a junk of information. They won't be in a position to make any decision if hell lot of information comes to them. So what they will be looking for is give a glimpse of overall what is happening. Give that. They will be asking their managers also that you give me a report which can just give me an idea of how we are performing in that particular market. So they need an information, external, internal, but not too detailed. They want more qualitative information, less quantitative, right? Now let's come to the tactical level. What is this tactical level about? It's the middle level management. Here, the middle level managers will focus on short term objectives. I'll not say day to day objectives. These are short term objectives. That means their duration will be from 3 to 12 months, not immediate, but 3 to 12 months. Or you can say it can extend to 1 year also, 2 years also. It can be 3 years also, but not beyond 3 years. That is tactical level management. It depends upon industry to industry, how they want to plan. Now, for them, what is the focus area? Individual departments. Because these managers will be finance manager, HR manager, marketing manager. For them, their own team, their own department is the focus area, not the organization as the whole. Marketing manager will not be bothered how the finance functions or if they achieve their targets or not. He will be bothered will if he and his team is achieving the targets. Then for them, what is the use of information? Information is simply used to ensure that the strategic objectives are supported well. That means whatever information they can extract, they just need to ensure that the main objectives are being met. Now let's come to the operational level. These are the people who are actually the doers in a company, in a firm, in an entity. The lower level management or actually which works, right? So operational managers, they have to focus on day-to-day management activities. Day-to-day production should not get halted. Monthly reports they have to produce. If daily production and daily targets are being met, if anything is interrupting the process, this is what they are supposed to handle. Now for them, the focus is not to deviate from the set targets. And if any deviation is happening, just control that deviation. That's their main job. For them, which type of information is very important and useful? More detailed information, activity specific, process specific, task specific information. If they have to take care of the raw material supply, that means only raw material supply related information is valuable for them. That's too specific, task specific. Their task is to ensure if material reaches the company, the organization in time, there is no delay in the material. For them, information related to material is the most relevant and quantitative information also. So they have to be very detailed in their approach. So that's a clear cut line of management levels which do work in organizations. One, strategic level. Two, there is tactical level. And three, there is operational level. Simple. Now let's talk about performance pyramid. Now what is this performance pyramid? I have created a simple pyramid here. Performance management, when we say, it has got a model. Its name is performance pyramid. There are no mummies in the pyramid, no mummies at all. We have simple links of different levels of hierarchy here. There are three levels of functions. We have top, middle, and operational. These three have to work in a coordinated manner so that the organizational goals are achieved. This is what is a performance pyramid all about? It's a model of performance management where different levels of the hierarchy are linked together to ensure that they work in a coordinated manner to achieve the organizational goals. They cannot just work for individual goals. They have to work towards the main center goal of the organization. That is the main crux of a performance pyramid. Although there is not much to study on this. Now let's come up to the three-stage model of strategic planning. That's a rational model. This has got some content coming from SBL also. Strategic Business Leader has got something related to this. You can just overlook it, but yes, it may be used in answering some of the questions. Three-stage model of strategic planning. So these are three stages. Again, this is a glimpse from your captain study text. I really liked it and could not just avoid putting it here. So there are three steps here. Number one, first strategic analysis does happen. Then an organization has to make a strategic choice. And then once the choice is made, they need to implement that choice. That means strategic implementation does happen after that. So it's a three-stage model of strategic planning. What are the three stages? One, strategic analysis happens in the first instance. Two, then once the planning has done, you need to go for a strategic choice. You need to make a choice. And then at the end, once the choice has been made, then strategic implementation must be done. Now let me just read these small bullets also. Strategic analysis. External analysis to identify opportunities and threats. Internal analysis to identify strengths and weaknesses. Stakeholder analysis to identify key objectives and to assess power and interest of different groups. Gap analysis to identify the difference between desired and expected performance. So I'll simply sum it up here. Do all type of analysis: external, internal, stakeholder, and gap analysis. To find out what? External analysis will give you an idea what all are your threats, what all are your opportunities, which you can utilize to enrich your business, to become more successful, to get a competitive advantage. Now look into your business. Internal analysis. What are you good at? What are your strengths? What you can't handle? That's your weakness. Then understand what is the stakeholder trying to get or trying to achieve. That's a stakeholder analysis. Are they really worried about only profit, or their intention is somewhere taking up the market share also? Understand that by shareholder analysis. Then gap analysis. If there is anything which has been desired but it didn't come out, that means there is a gap in performance. Analyze that. That's strategic analysis. Now, once this analysis has been done, you clearly got to know that yes, this is what is to be achieved and this is the gap which I need to fill between the expectations and the real performance. Now you need to find out the choices, how you can achieve it, how you can close the gap. That comes with strategic choices. For each business unit, you need to prepare a strategy. There are directions for growth. That means clearly there will be some choices where you can actually grow by investing in some particular markets, by investing in some particular products. Try to find out those choices. Then, whether expansion should be achieved by organic growth, acquisition, or some form of joint arrangement. That means when an organization is trying to expand, what all choices it can opt for or it sees. For expansion, it can organically grow on its own phase of time, or it can just go in with acquiring some other company. That can be another form of acquisition. And then joint venture or joint arrangement, where two companies can join their hands to run a new company. Now, joint arrangement will be typically when I am good at one skill, bad at another skill. Maybe there is some other company which is good at this skill. We as a combined team really can do wonders. That is what joint arrangements have been doing, and companies do resort to it. Then acquisition, Patanjali acquiring Ruchi Soya. Ruchi Soya? Find out about that. Yes, it's the latest acquisition, although not latest, but yes, it recently happened. So Patanjali wanted to expand into that particular oil segment, so it acquired that company so that it can directly enter into it. The machinery is already there, the processing has already been there. Although Ruchi Soya was into heavy losses, but then if the acquirer can see some profits coming from the target company, if they have the confidence that yes, I'll turn around this company, then why not acquire it? Maybe they are lacking management skills. Maybe you do wonders acquiring them, right? And then strategic implementation. That means now when the choices have been made, you have actually analyzed that yes, this is the way I need to go. Then implement it. Set targets, set key performance indicators, and then if any deviation happens, control it. This is how this three-stage model of strategic planning works. Now, to ensure effective implementation, objectives are to be translated into SMART. Now, we are talking about objectives when we have finalized that, okay, this is the strategy and this is the plan, how we go. So, these objectives, they should be broken down into SMART targets. Now, what are these SMART targets? S stands for specific. Specific targets. This team has to achieve this team has to achieve this, you have to achieve this, you have to achieve this. Specific targets. S. Let's come to M, measurable. The targets should be measurable, obviously. Then A, achievable. Do not give targets which are not achievable. The employees also will feel demotivated. How come you have given such a target which is not possible to achieve? So if I say you all are my students, you need to get 120 marks in APM. You will say, ma'am, रहने दो, नहीं चाहिए 120. That target is not achievable. Then relevant. Targets which are relevant for the main objective. And then time bound. Set a time limit that you have to achieve this much target during this proportion of time by the end of this quarter. I mean, if I come up and say you need to sell out 1 lakh units of a mobile phone handset within a year, within a month, within a quarter, within 10 years. I mean, I will take an option ki time specified nahi hai. I will take 10 years for selling 1 lakh mobile sets. Time limit has to be there. So these are the full forms of SMART. S, specific. M, measurable. A, achievable. R, relevant. And T, time bound targets. You need to break objectives into SMART targets. Now let's come to role of performance management in making strategic choices. We are talking about strategic planning. We are saying that strategic planning has to be a three phase process of planning good strategies. How is performance management going to play a role in this? Now let's just see what is this role. Finding out the viability of strategic choices. You are saying that we need to go ahead with an acquisition. You are saying we need to go ahead with a joint venture. Baba, are they viable? Can you really take them up? Are they really going to be profitable? This is the role of performance management in making strategic choices. Now, how does that happen? By evaluating strategies, you need to just follow three questions, three heads. First, suitability. Two, acceptability. Three, feasibility. Remember these three. If you do not find any model working, if you do not find anything working in the answer, these three will actually fit everywhere. The three criteria used to evaluate any strategy. If you want to take up acquisition as a strategy, how to evaluate that? Get the answers to these 3 points. First, is it suitable? Second, is it acceptable? Third, is it feasible? Now let's see what is suitability. So suitability is simply, is the strategy really a suitable fit? Is it? I mean, will it be good for the organization? That's a suitable fit. Does it really take care of our strengths? कहीं ऐसा तो नहीं है कि हमारी वीकनेसेस पे ज्यादा एम्फोसिस हो रहा है इस स्ट्रैटेजी में? हम वीक हैं एक्विजिशंस में, हम वीक हैं टेलीकॉम सेक्टर में, और हम अक्वायर कर रहे हैं कंपनी विच इज अ टेलीकॉम कंपनी. मे बी that means you need to first see the suitability, then acceptability. Will it be acceptable to the stakeholders of the organization? Maybe आपके shareholders ही बोल दें that we do not want to go ahead with this acquisition, we are not happy with this, then acceptability will be no, you cannot go ahead with this strategy. Then last, feasibility. Do you have the resources, the competence which is required to complete that strategy, to implement that strategy? Do you have that? You're talking about taking up a telecom company. Do you know ABC of telecom? Do you have the resources using which you will run that company? If you do not have those resources, if you do not have that knowledge base, it's not feasible then. So just try to understand the difference between the three words. Suitable is if that will work for us, if that's suitable to me. Now let me just take that in terms of ACCA. Now, is ACCA related to my strengths? That is suitability. Is it acceptable to me? Will I do ACCA? Yes, why not? That's acceptable. Now, third, but I don't have money at all. I am working part time in a company where my salary is 1000 rupees per month. Feasibility? Sorry, I do not have the resources to complete this qualification. I can't do that. So that's a feasibility issue, not suitability, not acceptability. Even if it is suitable for me, I am a finance person, suitable for me, I am accepting it. Yes, I would like to do that. It's a wonderful degree. That's acceptability. But I am in a job which is giving me 1000 INR of salary per month. It's not feasible option for me. So feasibility becomes a problem here, right? So this is the three criteria set for evaluating any proposal, any project, any strategy. So performance measurement is an ongoing process which includes a quick reaction to the changed circumstances, and hence the change must be brought in the strategic choices too. So here there is another role which is taken care of by the performance management function. Whenever there is a change in the environment in which an organization works, these strategic choices also must be changed, because with changed situations, choices, if are not changed, a wrong decision will be taken by the company. So that's a simple point. Change circumstances, change your choices also. And these change circumstances are brought in the business, in the consideration of decision making quickly by performance management, right? Now let's come to role of PM or performance management in achievement of objectives. Now, how can this be done? I mean, how can performance management help in achievement of objectives? So this is a beautiful chart given in the book. I'll make you understand how this is flowing. The senior management or the top level management, it is defining the objectives at the top. It sets the targets of performance and then finalizes that this is the strategy using which we will achieve these targets. Then these are interpreted into detailed financial models. That means some budgets are created, some numbers are given to the teams that you have to do the production considering this budget. You have to produce this much units every month. These are some financial models, financial numbers. Then comes actual performance. So if the actual results and the budgeted results differ, then there is a deviation from the planned activity. You need to analyze the major causes of this deviation. Once this is done, you have analyzed what is the major area of difference, then you need to take corrective action. This corrective action can be reviewing the budget, it can be modifying the budgets, it can be calculation of variances, trying to understand through detailed variances what actually is going wrong. And this process can be termed as control, right? So this was a small chart given. Although with the computer based exams, you are not expected to build this chart. I had to cover this up because this was there in the book and I just thought you may get confused in what is this chart about. That is why I wanted to explain this. Now let's come to most important part now, which I said that you all need to mark as very important: critical success factors and key performance indicators, KPIs and CSFs, right? Okay, CSFs, critical success factors, which are very critical or important for the success of a business. Key performance indicators, indicators or performance criteria which indicate good or bad performance of the business. I am simply just taking the technical meaning of these terms. Now let's just understand in PM's language. Critical success factors, most crucial areas where things might go right for the business to enable it to achieve its strategic objectives. Simply speaking, these are the factors which are very critical for the success of the organization. If they go right, then you actually become the market leader. They are critical success factors. So for Reliance Jio, good connectivity, critical success factor. Voice quality, critical success factor. For a hospital, the time within which they attend the patients, critical success factor. Success ratio of surgeries, critical success factor. For me, my students passing, critical success factor. My students getting the concepts, critical success factor. So critical success factors are those factors which actually make an organization stand better than its rivals. They are critical success factors, very critical for the success of the organization. Now let's understand KPIs, key performance indicators, the measures or the criteria which indicate whether a critical success factor is being achieved or not. Or in simple words, these are the indicators, these are the criteria which indicate if you are performing good or bad. You are performing good if you are actually achieving the critical success factors. You are performing bad if the critical success factors are not reached, not achieved. Simple, right? Now let's go into more details of critical success factors. What is this all about? So there is a topic in the book, prime sources of critical success factors. I have created a simple version of it. Factors which affect the choice of critical success factors for a business. Now, what is this all about? When we say critical success factors, there are certain points, certain factors which really affect what factor becomes a critical success factor for a business. Now, let me just take an example, the structure of the industry. Let's say the structure of the industry. Let's suppose it's an industry which belongs to FMCG sector, or we talk about FMCG sector. What should be the critical success factor in the FMCG sector? Or if we go more down deep into it, food, hygiene, quality, that's a critical success factor. But when it comes to fashion industry, what's hygiene in that? Quality, yes, will matter. Then cost will matter. When we go to automobile sector related to the cars, for them, what will be the critical success factor for them based on the industry? For the automobile industry, the driving experience, safety of the vehicle, performance of the vehicle, service cost of the vehicle, initial capital cost of the vehicle, these are all critical success factors. And as you have seen this, critical success factors, they are different in the type of industry. That means the structure of industry also decide or define what a critical success factor has to be for a business. Then let's go to point number 2, competitive strategy, industry position and geographic location. So for example, your geographic location will impact your critical success factors. If you have to deliver something in a very sensitive area, then your critical success factor will not be quality, it will not be hygiene, it will be delivering on time. If your business or your company or your entity has got very good position in the market, you are holding the market at a very big scale, then for you the critical success factor will be maintaining the services to the customers, ensuring that you do not lose business in the coming years. That's how your competitive strategy, your industry position will decide your critical success factors, what your competitors are doing. If your competitors are giving a service for free, you will have to also do. Critical success factor will be giving after sales service satisfaction to the customer because your competitors are doing it. So there is a product which is very good, but when it comes to service, the company actually makes you cry. So for you, you need to work on your after sales service. That should become one area of concern. On the other side, there is another manufacturer who is actually being preferred by customers just because of after sales service. That means your competitor is really working hard on after sales service. That's a critical success factor for him. That's a competitive strategy. Now you need to be rich in after sales service. Then environmental factors. With environmental factors, your critical success factors will change if the environmental factors change. For example, you are into mass production, but suddenly now your factories are increasing a lot of pollution. There is a lot of waste coming out of your factory, which is causing a concern to the government as well as the people around the factory. Now your critical success factor should not be mass production, it should be safe, sustainable production. That means your CSFs will change if the circumstances change. Then temporary factors. There are some temporary factors also which build critical success factors. For example, Honda had to recall its cars at a point of time because even Hyundai, they were having some engine issues. Even Nokia, when their mobiles were bursting, they had to recall their mobile sets of a particular series. Now, for them, the critical success factor becomes getting this problem corrected, ensuring that their products are safe. So, these are temporary factors. During this temporary phase of time, the company's critical success factor will become dealing with all the problems, correcting all the handsets, correcting all the cars which had that problem. Engines were to be corrected. So it's a temporary factor which is impacting the critical success factor of the entity. Then functional managerial position. Now, with every function, the critical success factors also do change. For the marketing manager, his critical success factor is selling as much as possible units. For the production manager, low cost, highest possible quality. That's his critical success factor. For the finance department person, for them, correct reporting, up to date reporting is the critical success factor. That means your functional position also does decide what your critical success factor is going to be. Right? Then we can classify the critical success factors in these four different categories. One, internal critical success factor, external critical success factor, monitoring and building. So let's just see them one by one. Internal critical success factors. Now these are the factors which are within the control of the manager. Quality assurance. He can ensure that the quality delivered is best. What has been told to him, what the customer wants. That is internal CSF. Now, external critical success factor, which are not in the control of the entity. The entity cannot control them. For example, petrol prices now. Increased petrol or diesel prices will inflate your distribution cost. Your distribution cost will go up because of that. The customer will also get the product at a high price. GST will increase the price of goods. So these are external critical success factors. Then monitoring. Now, what is monitoring? Monitoring is simply just seeing what you budgeted, what you targeted, and what you achieved. That is monitoring. And last one is building. So, building is absolutely seeing the organization and doing something for its development. That is building. Launching a new product, becoming innovative, new type of packaging, doorstep delivery of the products, getting registered on e-commerce websites. These are all building. We can see more detail in monitoring. Monitoring will include financially oriented critical success factors. They can be actual performance versus budget, as well as they can be non-financial oriented critical success factors also. Like, what is the personnel turnover rates, staff iteration rates, staff training rates. They can also be the critical success factors of monitoring. If labor is learning what we were trying to make them learn, that's another type of monitoring. With building also, there are some managers who actually see that their day-to-day functions are already in control, so they want to see their organization to be good in future, either in a new market or with an innovative product. Anything, they want to see something new for the organization, and they keep on working towards that. With the changed environment, they want their organization also to change and still be competitive. In such cases, CSFs can be successful development or launch of a new product or launch of a new service, or it can be entering into a new market, anything. But that is building. Building a better company is building. Now, KPIs. Now, what are KPIs? KPIs, key performance indicators. When we have something which can be measured, it's always done in a better way. Now, you just imagine you all have been getting grades in your BCom in terms of CGP, or let's suppose we give you A, B, C, D. Your motivation will not be really to that extent. On the other side, in class 12, you are really motivated because you have a measurement, exact measurement of how much marks you get. It's a 94%, or it's a 91%, or it's a 70%, or it is a 65%, whatever. But you have a number in your hand. To achieve better marks, you really work hard. But when it is grades, it really impacts your performance. That's what a popular saying is in terms of KPIs also. Something which is measurable is done better. That's a popular saying with this. This is again a beautiful chart. Now, some good performance measures must be created against which the performance can be measured. Now, where do we find the features, or what we can say that these are good performance measures? What are good performance measures? The performance measures which have got these characteristics are good performance measures. Now, let's see one by one. Performance measures which can measure effectiveness of business in achieving business objectives. That means your performance measures are good if they can actually measure if you are really achieving the objectives. Makes sense? Then if your performance measures can measure the efficiency of resource utilization, are you utilizing the resources efficiently? If you can give the answer to this, your performance measures are good. If they contain internal and external both performance measures, that means your performance measures must include internal as well as external information. It comprises of a mix of financial and non-financial numbers. That means when we are saying that we need to measure the performance, it should be measured in financial as well as non-financial terms. Linked to targets set for employee motivation. Are the performance measures motivating the employee? Are the targets motivating the employee? Some bonuses linked to their performance can be kept as a motivation strategy for them, right? Then next, cover short and long term organizational performance. That means your performance measures should cover up long term and short term, both performance of the organization. The performance measures should be flexible. If the business circumstances change, your performance measures should also change. They should be very clear. They should be very clear that what good performance is meant. If quality is good performance or keeping cost control is good performance, they should be very clear. Clear dimensions must be there. KPIs also must be smart, specific, measurable, attainable, relevant, and time bound. The way we had said that objectives must be broken into smart targets, KPIs must also be smart. The same full forms are attached with KPIs also. Now we are using this statement, something which is measured is done better. Is there any problem related with this? Yes, there are some problems related to this statement. Everything which is measured is done better. Really? No. Some problems do exist. Now, what are these problems? Number one, they assume, or the people who pass this statement, they have an assumption that people are motivated when their performance is measured. Is that true? Now, how will you measure my performance? So, am I motivated or am I demotivated because my performance is not getting measured? Let's talk about doctors. How do you measure their performance? How many patients they have attended? How many surgeries they have done? No, is this how we measure their performance? It doesn't work that way always. It doesn't work that way. Then their assumption that staff knows that the particular issue will be measured and have accordingly changed their behavior. Now they assume that the staff or the labor clearly knows that this is going to be measured and accordingly they change their attitude. Really? Do they really know that? Assuming that they know this. That's also incorrect. They may not know this accurately. Then the assumption that the factor being measured can be directly influenced by staff. Now assuming, now let's just see, we are trying to see if the target of production has been met by the labor. Number of units they had to produce, if they could produce it, that we are measuring. That means we are measuring the output. Is it really essential that every laborer will impact the output to the same extent? No. There can be difference in the output. And how do you measure exactly how much output did you create? And then the worst part, what sometimes happens, it is not directly influenced by them also. What if the material reached them late? What if the design suddenly got changed? So he will obviously have a lesser input or output. So assuming that they can directly control that factor based on which they are being measured, that's incorrect. Then the assumption that targets are seen to be achievable. Sometimes the targets are not achievable at all. In that case, assuming that targets are always achievable, that's also a very wrong assumption. Then the firms focus on what is easy to measure and ignore the more crucial but non-measurable factors. That's the big truth. They see how much units have been produced. They do not see if the increased production is on account of lesser quality, reduced quality, or compromised quality. This is where somewhere the firms go wrong. And then the last, measurement may foster unhealthy rivalry. When you always keep on measuring, then actually creates a lot of rivalry. अरे तू क्या करता है, देख तेरी बहन तो इसी क्लास में इतने मार्क्स लेके आई थी. Measurement problem bringing in rivalry between siblings. You must have heard that from your parents also, comparing you yourself, your marks with your siblings or your cousins. उसके तो इतने marks आए. अरे your neighbor, he got a 10 lakhs package and you are at just 7 lakhs. सुना है ना ये? Familiar with it? That is what measurement fosters unhealthy rivalry. So now you are jealous of that padosi, you are jealous of that cousin, and then if it is a sibling, then the siblings fight. This is you who has created problems in my life. If you would have not got good marks, today my parents would have really appreciated mine. तेरे ज्यादा की वजह से मेरे ज्यादा marks भी उनको कम लग रहे हैं. That's unhealthy rivalry which builds up in siblings also, and here between different businesses also and competitors also. Now, the role of strategic management accountant in strategic planning and control. Let's do one thing. We'll cover up this portion in the second part of this chapter, in the second recording, that we'll cover up very shortly. Till the time, please do read the chapter from the study text. Thank you so much. Take care. Bye.